Welcome back, guys. Welcome to Crypto Bullseye, the channel that brings you crypto news, crypto analysis, more importantly, days like this, crypto love. So how are you feeling today? Do you think this is going to be a major pullback? Anyone in Dogecoin after Mr. Musk's misdemeanors over the last few days with Twitter, down 10.2% on the day. So commiserations, anyone that's lost that amount on Doge today. So other than that, guys, we've got Injector Protocol at 9.7%, one of the standouts of the day. Enjin Coin 11.2%. Congratulations, anyone that's in there. Have you thought about taking profits? Not financial advice. So, other than that, we're down about 5% on average across the day. However, guys, I'm feeling pretty pumped. We've got lots to talk about. I've got some hopium to show you guys. But first, what do we need to happen before we get that popcorn effect in the altcoins? What do we need to happen before we get that altcoin surge? So, importantly, we're looking at the S&P 500 at a major resistance level. That we do break that major resistance level, you could potentially go to new highs. We've also got the DXY. Why is that important? Strength in the dollar, guys. That's what's on everyone's mind at the moment. How strong is the dollar? They've been tightening and tightening and tightening. Then there's a banking crisis. Oh, they've just eased. They've just printed more money. On the back of that, they devalued the dollar. What does that mean? It means it's inflated even more. What does that mean? People start thinking about Bitcoin more, a deflationary asset. So we've got the S&P 500, we've got the USDT dominance, we've got the Bitcoin dominance. We're going to look at gold, spot gold, guys. And once we've looked at those metrics and once we've looked at the DXY and how strong the dollar is, we're going to look at the euro dollar. Why is the euro dollar important? Because euros and dollars are the main makeup of the DXY. So that is another important metric that we're going to look at. And then we've got your altcoin requests at the end. Why is it at the end, guys? We need to know what's going to happen before the market allows for this altcoin surge. So stay tuned right to the end. If you're new to the channel, guys, consider subscribing. Turn on notifications so you'll be notified on market updates just like this. And obviously, if you're already a subscriber, guys, hit the like button, share it with your friends, and help that algorithm do its thing. Right, let's get into the video, guys. We've got lots to talk about.
I work hard each and every day. I get lost in the words I say. I don't push pause, no, I push play. I won't stop till I make a change.
Right, guys. Okay, we're going to start with the macros today. We're going to do things a little bit differently. I'm pumped for this video. We're going to have a look at the state of the world, starting with the DXY. This looks like a bull run in its own right. I want to ask you guys, why is the dollar the off-risk asset? Why do people go into the dollar when they're off risk? They print money left, right, and center during pandemics, wars. If they need a money chest, if they've got banking crisis they need to get out of, money printer goes brr. If the money printer goes brr, what happens then? Devalues the currency. An example, a guy in America has retired. He's got $100,000 in the bank after they've printed 40% more dollars into circulation. What does that do? Still got $100,000. You can only buy £60,000 worth of stuff, that per guy that's worked all his life. When the money printer goes on, it devalues the currency. And the DXY is an indication of risk. People, for some reason, go into the dollar when there's times of uncertainty, when there's times of war, when there's times of high inflation, when there's banking crises, people go into the dollar. So what is the dollar index? The dollar index is a bag of currencies traded against the dollar. Specifically, the main part of it consists of the euro, 32.65%, the Japanese yen, 14.64%, the Canadian dollar and the pound just under 12%, and a bag of other currencies. So you can see those currencies trading against the dollar, and this is how the dollar performs in times of uncertainty. Okay, so hopium. Weakness. We've seen weakness since here, and we were talking about it on our channel right at the top here. If we created this lower high and we had a resistance here, then we can start making a series of lower highs and lower lows, which is what we want. Why is that what we want? Why is that what we want? Because when this happens, each time that one of these support levels gets dropped and acts as resistance, it means that people go into other on-risk assets. Crypto is still early. Crypto is a speculative on-risk asset. And you can see every time this happens, where you get a move to the downside on the DXY, people coming out the dollar, this is what happens. Move to the upside on Bitcoin. And you can see why it's important that these two correlate together. So you've got Bitcoin here. We'll have a proper look at Bitcoin very shortly, but I just wanted to show you the correlation between the two. Right, okay, I'm going to do a rundown of some of the markets with you guys very quickly before we get into the altcoins. So I'm going to start with the euro dollar, and we spoke about the euro dollar. It was the main part of the currencies that trade against the dollar. So 32.65% of the other currencies that trade against the dollar is the euro. So euro dollar is important. You can see we're at this resistance level here. We're at this key resistance level, and it would be nice if we could break through here. If we could start making another series of higher lows and break through this level, that would show strength, show weakness in the dollar, strength in the euro. So that's what I'm looking for on the euro dollar, to break this key level. The key level on the euro dollar is 1.08 at the lower level to 1.14 at the top key level. So have a quick look at the S&P 500, and this is really important, guys, because what we want to do is we want to take out this high here. If we can manage to take out this high here on the S&P 500, we've got the next resistance level sitting at 4637. So all eyes on that, and all we need is a couple of uptick days to come and break this key area. If we do, bullish. We've got another key area here to beat, 4173. So that's what I'm looking for on the S&P. But if we do manage to break this key area here, guys, and hit the next resistance level at 4635, this is going to be decision point. Is it going to be a higher low from the previous high here, which is probably not likely because it looks like we've created that higher low here, or are we going to see an upturn in the market on the S&P 500? So that would be bullish, guys, really bullish. Next thing I want to show you guys is gold, and gold's going from strength to strength, and it's at a key resistance area, but it's been hovering at this key resistance area, and everyone's talking about gold. And I've got spot gold chart on the daily here, and we're at this, like I say, key resistance level. If we break above this, you're at recent price discovery, start making a series higher lows, higher highs. So gold is looking really strong at the moment. We've got the USDT dominance, and similar to the Dixie, we want to see weakness in the USDT dominance. We want to see it lose this key level here that's acted as support for 77 days. So it's acted as a support for 77 days. If we manage to lose this key area here and start trading in the bottom half of this range, it means that you'll start getting a run in the altcoins, a run in Bitcoin and Ethereum. So don't forget USDT dominance. So it's the dominance of the USDT in the crypto market. If people spend their USDT, this is what happens. People spend in their USDT on crypto, and you get the reversal effect if you look at the crypto market. Whilst this is happening, crypto market's doing this. So these key areas, always good ones to look out for. I mean, when you're at this strong resistance level here, it's quite obvious to me a lot of the time that Bitcoin and the rest of the crypto market will be on a level here. One of them is going to make a move first, and that's why we look at different markets. One of them will make a move first, and you can get an indication as to what's going to happen in the other market. So that's USDT dominance. Bitcoin dominance, we said we need to come down. This needs to come down on Bitcoin dominance. Hold this key support area. This key support area is sitting at 44.56%. And we've been in this range for some time in Bitcoin now, since May 2021. And what does that say to you guys? We know that the November 2021 was just about a new high for Bitcoin at 69,500. However, as far as the dominance was concerned, it was the May 2021 high that was the main factor. So more recently, like I say, we want this to pull back. We want the dominance to pull back. Let the altcoins eat away at the crypto market cap. And when the altcoins eat away at the crypto market cap, it can give a good surge. So Bitcoin to pull back, altcoins to rally. We'll have a look at the total market cap. Total market cap is including Bitcoin, and it's sitting at 1.14 trillion at the moment, creating a bit of a bull flag here. This is actually strong resistance from 12th of August 2022 high. So we're at a major resistance level, and we do need to break this here. So if Bitcoin does pull back and more money floods into the crypto market, you might actually see this break above, but it's strong resistance, and it's acting as strong resistance at the moment. So total 2, which is total market cap excluding Bitcoin, and it's not doing as good as the rest of the crypto market cap. It's not doing as good when you include Bitcoin. We know Bitcoin's the one that's rallied. We know Bitcoin's the big daddy. It's the market cap leader. And when you include Bitcoin into the total crypto market cap, it always looks a lot healthier. And you can see that with total 3 as well. When you exclude Ethereum, Ethereum is the second market cap leader. You take those guys out, and you're a lot further down. So what do I want to see on total 3 for a big move to the upside? We talk about head and shoulders patterns a lot on this channel. Head and shoulders is a typical reversal pattern. It tends to play out around 52% of the time. And when they do play out, you usually get this kind of move. So you can use the neckline as one base, and you can use the head as one base, and you can use that to measure, if you got a break and close, how far the market would increase. And it's saying it would go up, and this is excluding Bitcoin and Ethereum, to 516.38 if we did break that neckline. So there's a probability of around 52% of that happening if we did get the break and close above the neckline. So that's what I'm looking for on the total market cap. Right, okay, at total 3 market cap, beg your pardon. So it's lagging. The rest of the crypto market is lagging. It needs confidence in Bitcoin and Ethereum. And I tell you guys why these head and shoulders patterns are reversal patterns, because we talk about higher lows, higher highs, lower lows, lower highs. You can see what's happening here. You're in a downtrend. You've created a new low. So uptrend, you haven't managed to create a new high. You've got a lower high here. You've pulled back and you've created a new low here. Now, this is why a head and shoulders pattern is so strong. So you've moved back up to try and create a new high. You haven't managed to create a new high here. This is an inverse head and shoulders, guys, an upside down head and shoulders. You've pulled back, and this is where, in a downtrend, you need to create that new low. If you went down and create that new low, you're not creating a head and shoulders pattern, guys. The bulls aren't gaining momentum here. In this case, the bulls have regained momentum, tried to push price action back up. We haven't managed to breach this previous high, but that's what we're trying to do. If we broke the neckline and closed above the neckline, you've took out this high, you've took out this high, and you can have you surge to the upside. That's why head and shoulders patterns are a strong indication of market reversals. Right, let's get into your altcoin requests, guys. So Crypto Bullseye community, this is what you're waiting for, the altcoin requests by you. And we're starting with Enjin Coin. If you do like the content, don't forget, smash that like, guys, smash the like, let the algorithm do its thing. So Enjin Coin, what am I looking for on Enjin Coin? There's one key area that I am looking for. And if I stick a fixed volume range indicator onto this chart here, you can see that this is the key important level. This is the key range that we need to close above today. If we do close above the 0.4650 level today, that's showing strength for Enjin Coin, bulls have regained momentum, and then we can try and retest this previous high. So previous highs are sitting at between 54 cents and 57 cents. So that would be your targets if we did manage to close above this range here. So it's an important range. We've been in this range for some time. In fact, going back 8th of May 22, and that has been, guys, 333 days so far. So this is an important level. What does this mean? This is the area where the most traded volume has happened. So you can see that price action comes back to this area time and time again. It's acted as support, it's acted as resistance, and then it acted as support, and then it acted as resistance. This is the key area we need to take out before we can test the next area. If we do manage to take out this level, these highs would be the next level that we'd be looking at. And that's sitting at top of the range, 74.78, bottom of the range, 70 cents. So you can see why we're looking at the other markets first. You can see why we're looking at the USDT dominance, the Bitcoin dominance. They give us a key indication of sentiment in the market. If the markets weren't looking great and people started going more off risk back into dollars, for instance, then you would be worried at this level here. You'd be taking profits at this level here. You wouldn't even be looking at these levels and you'd be de-risking yourself. So that's why we're looking at that. And that's Enjin Coin. Injector Protocol absolutely smashed it again. It's formed a bull flag. It's took out a key resistance area at $5 on one, and it is forming, like I say, this bull flag. So how can you trade this? Not financial advice, but bull flags are easy, guys. Once you've got the break of the flag to the upside, longs, to the downside, shorts. And where would you be looking for targets? You can get your Fibonacci extension level from the previous low to the high, back down to the low, and you're looking at equal measured move here at $6.18. 1272 extension, if you do get an extension, is 689, 690 nearly. So that's Injector Protocol. We've got Alchemy Pay next, which is forming a beautiful bull flag. It looks like it's breaking out from this bull flag actually to the upside. So we can just stick a trend line on there. Yep, breaking out to the upside. That's bullish. See what the rest of the market does first, because you can see that Bitcoin's had its day. You look at the rest of the crypto market in comparison to Bitcoin, and this is why the total market cap looks a lot better than the total 3 market cap, which excludes the big daddies, Bitcoin and Ethereum. So they've run, Bitcoin mainly has run. It's forming a flag here. If we do take out 28,369, that's going to show strength for Bitcoin. Depending on whether the altcoins rally, it could mean an uptick in Bitcoin dominance. But ideally, Bitcoin can come back down, test this 276-day resistance as support, and that can give the altcoins confirmation that we're going to make and carry on and move to the upside. So back to Alchemy Pay. Where is the key target areas of resistance going forward? It's going to be the highs. So you've got 45 cents here, and top of the range 51. So that's that. We'll have a look at AVAX next. AVAX not doing much, hovering at a key resistance area. And if we do create a lower low, lower close here, you'd expect a little bit of a pullback there on AVAX. Dogecoin, Mr. Musk changed Dogecoin, or changed Twitter with the Dogecoin symbol not long ago. And you can see that that happened on the back of it. So this is happening now. We're having that pullback. So obviously buy the rumor, sell the news. So that's Dogecoin. We'll go through a couple more quickly. Theta, key area of previous resistance that we want to act as support is $1.05 on Theta. So we're currently testing that. Let's see if we hold it. Right, okay, last one, guys. It's Chainlink. What I'm going to show you on Chainlink is how you can take advantage of a range. So first and foremost, you've got the top of the range and the bottom of the range. What we're going to do is we're going to add in our areas for the top of this range here and the bottom of the range. So you've got top sitting at $9.52. You've got bottom of the range sitting at $5.48. How big is this range? How big is the range? 73.31%. How many times has price respected the top of the range and the bottom of the range? You can see 1, 2, 3 times it's respected the top of the range. 1, 2, 3, 4, 5, 6 times it's respected the bottom of the range. What is that telling us? This range is holding. How long has this range been holding? 331 days it's been holding. Where is the mean? Where is the place where we'd expect price action to come back to? And how can you take advantage of that? Remember the fixed range volume profile. So where you can find that, guys, tools on the left-hand side of your trading view, fixed range volume profile. So we can add that on, start of the range to the bottom of the range, and we can get our mean. Our mean is where we're currently sitting at here, and we can just add that in. And it's sitting at $7.20. So are we interested at $7.20? Or do we expect price action to do something like this or something like this? If price action did something like this or something like this, how can you take advantage of that? If you're already in Link, You can offload at this area and respect the range. If it went like this, you're always going to get a chance for that to act as confirmation. It hasn't done that. Respect the range. Offloading, accumulating. This area here is no good to us. This is where price doesn't know what direction it's going to move in. The bulls and the bears are fighting at the mean reversal point, and this is the area where price action is mainly traded. So you'd expect price action to come back to this area. You've got to respect the range until it's broken. So that's how you can accumulate and distribute during a range. It's held for nearly a year. You've got to expect it's going to hold longer until it doesn't. So people always say the trend is your friend until the bend at the end. You can use ranges to your advantage as well. When you're trading short term, these are difficult to trade. So you don't know what direction it's going to be. But when you've got limit orders set here for sell, 20%, 20%, 30%, whatever it is, and you've got buy orders sitting here, 20%, 20%, 30%, you can use the mean as the offload point, and you can use the top of the range for the offload point and the bottom of the range for the accumulation point. So when it's at the mean, it doesn't matter which way it goes. You can just ride it and you can accumulate with it. You can accumulate with the range. So I hope you enjoyed the episode, guys. I just wanted to show you how you can dollar cost average on steroids. This gives you an edge because at the end of the day, if you're just dollar cost averaging once a week, that means you're going to get these areas here, these areas here. But if you put a little bit of work in and set your limit orders at the bottom of the range, offloading at the mean percentage, offloading at the top of the range, you can start accumulating more of that without putting anything extra in yourself. So don't forget, subscribe if you're new, like it, take care of yourselves, enjoy the rest of your weekend, guys.